From May, it rallied to June. And then it dropped again, July, August, September. October, we tried to rally. November, we faded away. And December is more like a crux to the bears that they own the territory. 2021 is the year of the bears. So let's just go through some things that are clear in my view. So tonight we do dine in hell. You would argue it will still be dining in hell for the next few months. So a few things to understand. Countries are reintroducing travel bans over the Omicron variant. Yes, a few weeks ago, the biggest catalyst for the downside risk had to be about, well, it's not just a few weeks, but maybe we're going to talk about the entire year. It was more about the inflationary pressures. It was more about potential tax rate hikes or interest rate hikes. People talked about valuations not stepping up on the earnings releases. And you actually had choppy markets because you've got some earnings actually meeting guidelines and beating it. Some of those were Enphase, some of those were Qualcomm. They did meet and race. So you do have some sectors quite strong, specifically semiconductor. A few of the solars actually managed from an earnings standpoint to actually beat. However, I would argue that there's always this noise in the market. And the noise was temporarily tuned out simply because everyone was discussing about the metaverse. Everyone was talking about how great Airbnb's results were and how great the retail inflationary pressures weren't getting seen on the earnings fronts. We discussed all of that. But around November 23, specifically about 2 weeks ago, Angela Merkel talked about this Omicron variant. It didn't have a name. I would say that 2 weeks ago, Angela Merkel was just alarming the world about the cases in Germany. I was thinking about that time on whether should that benefit the metaverse more? Should that be a reason for me to just go out and short the airlines, go long Moderna, and so forth? And well, what we're seeing right now is actually, if I had acted on most of my puts, I'd be up about 300% in 2 weeks' time, especially if I shorted Asana and a lot of high growth names. What I did though was close my reopening trades, whether it was Capri Holdings, Tapestry, Nike. I had Roblox good moves, but I closed my positions. So I closed some good names like Qualcomm, Nvidia, because there is more volatility ahead. Rallies would be sold. And if you didn't have the conviction to close your positions then, you would actually see that the bears are active on any rally. They're actually very active on any rally. And you've got more and more news happening that are noisy. At the best, it's noise. It's always noise. You could say, oh, Omicron variant is mild. But mild or not, these are truths. Countries are introducing travel bans over the Omicron variant. You've got EU, Israel, Morocco, Brazil, Indonesia, Australia, introducing a lot of bans. Singapore is now facing a critical 2 week as Omicron's unknowns are threatening reopening. Let's just go through some headlines. You've got prepare for a more contagious virus, whether it will kill us or we are immune, we don't know. But of course, prevention or preparation for Armageddon is not a bad thing. You've got COVID-19. The Economist is asking how dangerous is Omicron. The truth is everyone isn't aware. The people are saying that it is not as dangerous and it will just pass by like a flu. We have yet to really tell. So the biggest risk is not to do anything.
As the World Health Organization.
You've got Boris Johnson ruling out a lockdown as UK citizens are confused. So when you're confused, you don't know what the government's going to do. Today you have operations. Tomorrow, do I have to close down? So confusion leads to uncertainty in the markets, and the markets will think first about selling rather than waiting it out. And that's what the markets reacted upon. It wasn't panic. It's more of, it's a deja vu all over again. Doctors saying US must prepare itself for a potential perfect storm, whether you want to believe in doctors, Dr. Fauci, etc. Who knows? People are also tired of getting told whether they could leave the house or not. And a lot of Americans are actually cursing when they are asked to stay home because they don't want to. And I agree with a lot of sentiment that they're vaccinated, so what gives? I thought that I'm vaccinated, I can leave. So you see that people are very angry, and a lot of entrepreneurs also don't know what to do, right? Germany just announced, and this is news today, announced a nationwide lockdown for the unvaccinated, which is really a trigger for some people who believe that they have their own freedom, etc. To be honest, if you ask me, I mean, you are supposed. Oh, sorry, I didn't notice that I was muted. I do think that for the good of the world and the economy, they're just really trying to prevent more contagion, right? So we've seen it before. We want to just be, I forgot the words of the doctors in who was saying, I forgot. But basically, you want to be more safe and more paranoid rather than complacent. So if you're doctors, I guess like the first precaution that you usually do is just be more paranoid, whether it's mild or not. Who knows what the variant really is. So the markets, you could say they overreacted, but because there's no certainty, there's no such thing as overreaction. Nobody knows anyway, right? So who knows what overreaction means until then? So uncertainty leads to aggressive sell downs. And as about the bubble in technology and cryptocurrencies, well, whether they use the Omicron as an excuse or they just wanted to sell the valuations for a long time, I'd say that a lot of value investors are just simply sharing in what happened to the recent 30% sell-off in Asana and DocuSign is that slower growth and high valuations don't mix together. In a cocktail world, these things don't mix. You need to continuously beat expectations to stay on top of the valuations. And if you don't beat, you get killed. As for crypto, the only thing that people aren't penalizing crypto for now is that, well, crypto was never earnings related. What type of earnings are we talking about? There's no such thing. But if it's in the crypto world, obviously crypto stocks are getting killed because Coinbase, Riot, Mara, Hut, Bitfarms, they are not producing enough Bitcoins to merit their valuations. So if you'll ask me from a strict valuation sense, most of them do deserve to die. And it has nothing to do with whether I believe in crypto in general or just simply their valuations. Okay, also a few things to share. Elon Musk to Satya Nadella, all are unloading shares at record pace. CEOs are cashing in approximately $69 billion. You've got Jeff Bezos, 10 billion, Elon Musk, 20 billion. This was actually a late news, but he's still ongoing selling. Walton family sold 7 billion of Walmart, Zuckerberg, Facebook, or AKA Meta, sold about $5 billion. Google, Larry Page, Sergey Brin, Satya Nadella, they're all unloading shares. At federal side. Whether you want to say that, well, it doesn't really matter, these insiders just want to do tax harvesting, tax loss harvesting, I don't know, end of the year selling, whatever it is, there is a big deal when every CEO in the top company in the world is selling shares. It's not good, right? So you've got these types of share selling, record insider stock sales, CEOs are unloading shares. United Airlines opened around 3 months ago, New York to Johannesburg, which is South Africa. So I'm not trying to play devil here, but the case of California Omicron could have been brought by travelers. And actually you could understand why some people could be blaming airlines. I mean, so much for the celebrations, nothing to celebrate. In a day there was a day where everything was red except for Apple, Pfizer, Moderna, Tesla. In a single day after, the market actually was up. And I would say that this uptrend in a day does not tell the whole picture. In fact, I'd say that was a chance to short even more. So let's just go through some memes as well. Jack has moved away from Twitter to now become CEO of Bitcoin. Joke. Well, Jack Dorsey was leaving Twitter, I guess, to focus on Square or basically focus on his Bitcoin dreams. These are, of course, memes. But I understand that the world is generally okay with Jack leaving Twitter. In fact, he was being asked to resign for over 10 years. So, yeah. And as for all the inflation moves, indeed, the world believes that printer is coming. Jay Powell has no choice. Omicron variants, inflation is transitory, is debunked. So yeah, all the crypto fans have always bought Bitcoin. It's probably a leg up for Jack to actually be just the CEO of Bitcoin if he wishes. Of course, there's no such thing. It's a meme. But I do believe that the general persistence of the secular trend of higher inflation is true. So I would be quick to dismiss people who thinks that the oil crisis is over. I do think that inflation is there. I do think that we have a commodity super bull run. And that also means that your gold, silver, your Bitcoins and everything, because Bitcoin is a replacement of gold or digital gold, whatever you want to call about it, those would still persist. You'll always have a buy the dips crowd on commodities and not cryptocurrencies, but Bitcoin in general, yeah. Amongst the memes, the people are still waiting for the next Shiba Inu. Of course, I'm just joking. Could it be the Terrier? Could it be the Chihuahua coin? But it tells you that speculation is rampant over shitty stuff. And if you think this is a joke, Elon Musk did threaten JP Morgan with a 1-star review on Yelp over a lawsuit, which is $160 million. I mean, it's really funny the way the world is now, but this is the kind of world we have. You've got the king of the world trying to threaten the other king of the world with a 1-star review on Yelp. Okay. And a few things like this, jokes. Rivian was $100 billion, Tesla $1 trillion. I don't know which is a bigger joke. But sometimes memes, sarcasm tells me a lot of things about the world. I am obviously not a fan of Rivian, and I also seriously doubt how Tesla can stay with that $1 trillion mark. Not really bearish on Tesla, but can it shave 20% off of that mark, or 60% or 40%? Give it to the people who understand valuation. But Rivian has a lot of problems. Ford and Rivian are not working hand in hand for electric vehicles because, of course, they are competitors. Because Ford has the Mustang Mach-E, which is a truck, and Rivian is a truck. So obviously, Ford will not help a competition. It's like telling Coke, help me, Pepsi. Duh, it's not gonna happen. I don't agree with this. Shamat is asking people to explain the $100 billion plus market cap. He thinks it's not crazy, while I dismiss his views. I don't think it is worth 100 billion. So I do believe short Lucid, short Rivian. Lucid is trading at about 70, 80 billion dollars. Doesn't make sense to me as well. Short Rivian. In general, the EV industry is rife with competition. When you have a competition with Tesla eating the entire market share, my argument is that there is no room for so many winners. So you're gonna all bleed. and the lofty valuations and the EVs in general would get killed. So there is also gonna be a difficulty for pre-revenue companies, and SPACs that are trading at 30 plus, 40 plus, 20 plus would likely get killed. The target that people, in my view, would short would be Blink and ChargePoint, and likely a lot of SPAC EVs if they haven't shorted even more. So most of the time, these would have been shorted or they would have been squeezed. I think Lucid was just a short squeeze move from about 16 all the way to $50. It will get deflated back to 16 or 20 bucks. You could tell me I'm wrong, but I think it was just a squeeze effect based on the delivery numbers, the pre-orders, and the factory opening. But it will be shorted or sold at the very least. This is Blink charging. It has an infinitesimal market share versus ChargePoint. And so I think Blink, this is a whole distribution in the making. This entire 2021, you've got insider selling in my view. And every rally at 44 has always been sold down. And this is just going to be a continuation down to 26. And if worse comes to worse, it goes down back to 12 or 10. So you've got the reward for the bears. Control it through shorting. And this is the market cap of your Blink. You could see Blink went to about $2 billion. You have less than 100,000 charging stations there. I don't think that you have to pay $2 billion for a company that has no revenues yet. You could be positive on the entire EV trend, but Polestar, aka GGPI, just like all companies in the SPAC field, in my view, is going to go to about $5, simply because, well, the EV SPAC hype is done. 15, 16 is the top, going to about 8 or 7. I don't know, but the trend is your friend. Let it fall all the way down. Polestar Europe car would have difficulty. Just go through some things. America's major airlines are bringing back thousands of pilots, flight attendants, and other employees, thinning their flight schedules to ensure holiday travelers reach their destinations on time. They cannot afford another one of the high-profile breakdowns that have plagued the industry this year. So that means that airlines were ramping up hiring people. Unfortunately, American Airlines had to cancel 2,000 flights during the Halloween weekend. The company blamed bad weather and staff shortages. It was American's second breakdown since late spring when travel bounced back. Southwest Airlines, Spirit Airlines have had their own meltdowns. Delays have gone up, every major air carrier during the COVID-19 pandemic. What's at stake is nothing short of trust of the American traveling public. If you are not trusted as an airline, you're nothing. I honestly don't want to be working in any airline, even as a customer service, because I would think that every single day you would be cursed by all travelers for any meltdown, any stranded, the things that you have no control of. Salute to the people working in American airline industry or any airline industry, but this is a tough industry, and sorry, but the Wall Street world does not really care about giving mercy. This is a difficult industry. It's a short. United Airlines CEO, of course, has to pacify investors, saying Omicron does affect near-term bookings. Impact should be smaller than Delta. That is what we call hope springs eternal. Now, Elon Musk also, he threatened to give JP Morgan a 1-star review on Yelp if it does not withdraw its lawsuit. So let's just go through the facts and the news. An ongoing legal dispute between JP Morgan and Tesla led Elon Musk to fire back at a bank in a recent Wall Street Journal article. If JP Morgan does not withdraw their lawsuit, I'll give them a 1-star review on Yelp. It's like, Mommy, if you hate me, I'm going to just give a 1-star review on your company. As if that is something that will affect JP Morgan. JP Morgan says Tesla owes the bank $160 million from a warrant trade dating back to 2014. With all these penalties, it makes sense that Elon's Tesla would sell and sell more shares. An ongoing legal dispute between JP Morgan has elicited a memorable response. If JPM does not withdraw their lawsuit, I'll give them a 1-star review on Yelp. This is my final warning. Serious allegations deserve serious responses. I will now talk to the JP Morgan manager. I guess he was joking. Was he? Sometimes I don't know if he's joking or not. The dispute revolves around Tesla's warrants JP Morgan received in 2014 for helping the EV maker set up a trade. The warrants were incredibly profitable, giving Tesla's recent ascent to a $1 trillion valuation, giving their bank the right to buy shares of Tesla at a predetermined strike price. According to the contract related to warrants, JP Morgan had the right to change the strike price if Tesla announced that it was exploring a sale, as that would impact the value of the warrants. JP Morgan went ahead and lowered the strike price of its warrants in 2018 after Musk tweeted funding secured at $420 per share. Once the deal announced by Musk did not materialize, JP Morgan raised the strike price higher, but not all the way back to the original strike price. When the warrants expired in June of this year, Tesla paid JP Morgan based on the original strike price rather than the adjusted strike price made by the bank. Options were, anyway, this is Tesla shares for you. Understandably, the market is so afraid and Tesla became their safe haven. However, I don't think it's a safe haven when the CEO of Tesla is actually sharing openly how he should sell his Tesla shares. What we're going to see in Tesla is likely a drop to about $1,000 or $950 or $900. People would say that is a healthy pullback. It is just called a correction. Sarcastic or wise, 11 to 900 is still 20% away. Musk just exercised more options. He's selling more $1 billion every single day. That these are all today. So insider selling. A few things also understand. Las Vegas Sands, I've been bearish on casinos, specifically Chinese related or casinos in US with Macau exposure or Asian exposure. Las Vegas Sands is one of them. We are just more or less reiterating why we don't like the company. Las Vegas negatives. Number one, lots of debts, 8 times debt to equity ratio. Number two, they will not be able to handle their ill-timed expansion in Singapore. Yes, they own the Marina Bay Sands in Singapore. No travel or at least more restrictions on travel, which really will have a hurting effect for casinos. Your Chinese casinos today have a lot of trouble with the government, not just Las Vegas Sands or Sands China, because they have to keep on renewing. And I don't know what renewal means. Does it mean more fees? It's really difficult when you are supposed to be in bed with the government every now and then. It is, for me, disaster after disaster. More or less, I'm just afraid for these kinds of stocks. And the only thing I can think of is to short them to hell. Some casinos that are also in the US that you might want to actually look at, it could be a three-headed monster coming at you. Caesars Entertainment, 80 to 120, looks to be a three-headed monster coming up. Melco Resorts, obviously nobody likes Chinese casinos, but it's going to go just new lows. So the weakness in China has been apparent all year long, and the US weakness hasn't been there yet because the US believes in reopening. But I do believe that the consensus view on the reopening is going to change a few months from now. So what happened in China could happen to US. ChargePoint, okay. So the thing about ChargePoint, we do love SBE, right? SBE, aka ChargePoint, changed name. But you can argue that paying a price of about 20, 26 or 30 or 50 or 60 or 100, all of them started at 10. And with the SPAC winter or the SPAC fever dying, you couldn't argue high valuations for any SPAC, even if you are the number one and even if you are a beneficiary of Biden. After the climate change is over, what's the next catalyst for ChargePoint? My argument is that while we are in a secular trend for solars and electric vehicles, there will be skepticism by the market on how high ChargePoint should trade at. And what we could clearly see here is that $26 is a resistance. The support is 17. If that breaks 14, all hell goes loose after the breakdown all the way to about $4, $5, $6, $7. So I would just be safety first rather than doing anything. Chinese stock NetEase tried to defy the gravity because they are listing an IPO reminiscent of a Spotify of China, similar to a TME, like Tencent's Music Entertainment. I don't think that is gonna be enough to sustain the valuations. In case you hate China, let me give you a good Chinese stock to short upon. NetEase seems to be a good short here, about $107. That said, it is also true that NetEase could be a neutral because NetEase is involved in video gaming. You do need the government to really penalize all the video game distributors like they did with Tencent. So sadly, I do love video gaming, but I had to close my Tencent position as well, just to be safe. DraftKings, there's no such thing as reopening. You've got weak numbers, you've got sports betting, but it does not seem to have the numbers to back it up. DraftKings was a SPAC from about $10 rallied to about $60, $70. My argument would be these $30 SPACs would go back to the $10 arena. So unfortunately for DraftKings fans out there, I think that any sports bets isn't enough to sustain the valuations. So the market is just judging this from a pure valuation sense, in my view. So DraftKings gets a short. Salesforce didn't meet numbers. Mark Benioff having a slow growth theme as well. And because Salesforce isn't cheap, the markets pummeled it down like 20% in a single day, 300 all the way to about 260. Any rallies to 270 would get punished until it goes about $200. In case you believe that remote work is a secular trend, and I do believe in that, even so, Salesforce is always in competition with Microsoft and with Zoom Video. And in recent times, it might also compete with Facebook's Meta platforms. So I think that there's just too many questions rather than answers. And the first answer would probably just short the hell of it. This is the news, in case you're not aware. Salesforce has its worst day since the beginning of pandemic after a disappointing earnings forecast. Salesforce, the steepest drop, reported better than expected revenue and profits, but still trade all the estimates. More or less, I just think that high valuations have been the frailty. It's not really about the business per se. Now, for the remote work fever, Google is saying that you are still supposed to stay at home. Google workers in US will not return to the office as expected on January 10. Google's VP sent a company-wide email Thursday saying Google is not requiring offices to return and still encourages them to build muscle memory, and they will postpone it several times amid the pandemic. Now, because nobody's going to go to the office, one of the best to short would continue to be WeWork. Short We, 8 to 10. Forgot about this stock, actually. Forgot that it was even listed. Yeah, obviously this would have been a squeeze play. That was a short at 15. We'll see whether it goes to $5 or $6. Any rally of WeWork, continue shorting. WeWork disclosed material information that it needs to restate their financials, aka their accounting numbers are all dodgy. In usual times, you'd have seen it 50% down the next day. Just over a month after debuting on the public market, WeWork has already hit a snag with investors. WeWork said that they used the wrong public share count. The stock dropped more than 5%. What are they saying? Some of the stocks issued was incorrectly classified as permanent equity instead of temporary equity. It should be restated to report all public shares as temporary equity and should no longer be relied upon. Of course, the news about this drop will imperil Masayoshi Son, since Masayoshi Son's biggest fall down is his stupidness or stupidity for funding WeWork. A few things that are a little bit contrarian. I am a big fan of C Limited, but sometimes we're wrong. So we do have to close and sell our C Limited. Sea Limited, sell it to 62,300. Why? Because it's a competition pool. Sea Limited is gonna spend, Grab is gonna spend. It means that all the shareholders will not get any income for a long time. And you know how investors are hating the fact that they don't have cash flows and just have a huge valuation. Now, I'm not sure about this, but I would prefer to sell first and ask questions later. I think I could buy it at about 200 plus areas, perhaps. So anyway, Sea Limited has gone something like 30 all the way to about 350, 10x in about 2020 to 2021, 2 years. I guess it deserves to go back to about 200 below. So this is Sea Limited. I think that the view will be cut in half from 360, likely to fall to about 180. You could buy put options at $270 because I think the rampant competition is the biggest risk on Sea Limited. You've got so many competition. Of course, Shopee proved that they're able to fight Lazada because like number 1 Shopee, number 2 Lazada. But now the question is Sea Limited also gonna fight against Grab? Because, you know, C-Money versus Grab Pay. And I'm also not sure if Grab, who wants to be the super everything app with $1 billion from their SPAC, will they spend something in selling things online? I'm not quite sure about that. So rampant competition could derail Sea Limited's number 1 position or make them bleed like a bloody war, like fight to the death and see who wins. But I always think war, nobody wins. So it's going to be a price competition and shareholders die if they fight and not collude. I don't think they are going to do the collusion effect. So I think they're going to fight to the death. Grab SPAC splat, caps off a bad week for blank check combinations. Grab was like 20 all the way to $8. I mean, whoa. I think it was like pre-market 20 or 18, and then it fell all the way to $8. So of course, some people aren't actually able to trade on pre-markets. So they only saw Grab 13 all the way to about 8. My viewpoint is that, yeah, it's just red revenues, red losses. So with mobility curtailed for the next few quarters, you don't have any reason to own it. Because the business of Grab is still ride hailing. It's like the Uber of Southeast Asia. So if you don't like Uber, if you don't like Lyft, then you'd say, oh, what's the point of owning Grab Taxi? At $40 billion, you wouldn't want it. At $20 billion, maybe. So could go to 5. I don't know if it's going to go to 5. But with the drop like that, I'd say that people's view is they could probably buy it at 5 or 2 or 3 or 4. I don't know. Another thing to watch out for is Chinese companies like the Chinese Rivian, in case you're not aware. If you don't like Rivian, yes, you can also short TSP or Too Simple. There's so many jokesters in the world. I'm not saying that these aren't innovative companies. Obviously it is, but since valuations are questionable at this point in time, the companies that have very little revenue and very high pre-revenue forecasts would be the first to go down. Too Simple could go down from about $40 all the way to about $20. Watch out for these names. Too Simple TSE could be too complicated for your portfolio. Rivian, yeah, so just short even at 110. So a lot of people were shorting it, I think, from about 90 to 180. That was the first pop, which is, I think, a spike move. That was just the bubble squeeze. And then the squeeze is juice left, no juice left. So 170 all the way to 150 to 130 to 110. Tomorrow it's 90. The next month it's about 70. Who knows? Marathon Digital, the numbers don't quite add up. You say you've got Bitcoin, but the Bitcoins you've mined are not enough. And so 80 could go back to about 30 or $20. You want to be shorting 55 Mara or 50 Mara. Think that it's just gotten ahead of itself. It's not saying that Bitcoin's going to go down, but if it does, that also makes Mara go down further. But it's really just lack of enough production. So you've got more questions rather than answers. MicroStrategy, I don't think there is a premium that you have to pay for a Bitcoin Pure ETF. So like, why do you have to pay a premium for a company that owns Bitcoins? You could have GBTCs, MSTRs, or you could just buy Bitcoin itself, either in Binance, Coinbase, or whatsoever. I don't see the point of having a Bitcoin ETF if you could just own Bitcoin yourself. So I don't see the value. Maybe I'm different, or maybe I'm stupid. So I think like MicroStrategy at about 700 should be down to about 400. Owning Bitcoin does not give you a premium. CPI, inflation. So for all the believers of inflation, yes, I do also believe in that. Now, these numbers could even be fudged. But the trend is your friend. And even if the world doesn't want to believe in inflation, every single person knows it is real. So since inflation is not transitory, one of the things that people are flocking as safe havens would still continue to be BTCs. And probably they're shorting the markets that they don't believe upon. And they're probably, I'm not sure if this is true, but I'd argue that they're buying a lot of precious metals and commodities. Some memes to share in a world of hell. There is massive distrust on Facebook's meta platforms. I am different. Obviously, I believe in it. But yeah, there is lack of transparency about data, right? So these are memes on Facebook's. It's time to announce who we truly are. We are a neural net-based artificial intelligence. Haha, Terminator. If you ever need any info, just ask Facebook. We'll secure your data. Don't worry. Actually, we'll secure it and sell it. So the thing about it is that Facebook just has super huge cash flows, yes, but it also has super huge mistrust on the public. And so its trajectory on being metaverse is gonna be asked and questioned, and the adoption will be asked as well. So for safety purposes, if you want to just be safe, because Facebook actually dropped from about 350 to 320. I think the people who are metaverse fans are thinking, is Facebook really the best way to do metaverse? The answer of the market is no. They'd rather have Apple wearables and augmented reality glasses. This is Lucid Group, by the way. Lucid Group at $85 billion is likely not going to be sustainable. You want to actually short it all the way to about $28, in my view. Rivian, yeah, that is a short. Uber, I believe, is also a short. So you've got bleeding losses. So for a while now, earnings of Uber has always not matched up, even with reopening. And so if there is more remote work happening in the world, likely for Uber to bleed more losses, this would probably be the same template as Grab. I'm not really saying that I know the future, but this is what the trend is. Uber 60, 50, 40, next month 30, 20, 10, la la la. Of course, I could change my mind, but for now, the view is bearish. Boyd Gaming looks like a three-headed monster happening here. This is what you call a classic double top. That M is what this list, M means massacre. Okay, 60, let's go to $30. Let's see whether the casinos would hold up or probably not. Earnings coming up next January. Okay, so preparing for a massacre for casinos. Matterport, VR glasses for the niche community of real estate. Yes, you did well, but at $35, the market couldn't keep it up. Seems like this was a blow off top for VR. Matterport, looks like we're gonna go down to about $22. You wanna probably short it if you want to safeguard yourself. DoorDash, since I hate ride-hailing deliveries, we might as well include some of the things I hate. I've never believed in this IPO ever since it was listed. So give me I relish the fact that it's being sold down. Margins are thin when it comes to ride-hailing, food deliveries like DoorDash. I don't think they have a business model at all. So I could be wrong, and I'm not trying to sound smart. I just don't believe in it. I do have a 1 our profile asking about the DoorDash valuation since IPO. So it's gonna go 50% lower. 260 fell down to 160. The Emperor's new clothes is gone. Let's go down to about $70, $80, shall we? Okay, so I think any rally of DoorDash is a short. You can, of course, go through the numbers and the earnings because the earnings of DoorDash fails. And actually, this is just fundamentalists saying, we've been right all along. So actually, it's only now that I'm actually confident to short, and only the companies that I don't really like. DoorDash is a short for me. I think, guys, that C Limited is a very tricky company. But if you just simply sell it first and then ask questions later, you'd be in a better shape. So I did close almost all my positions, and then I just went rampage short. Could be wrong, but that I think is I'm not sure. Am I consensus view? I think like the consensus view is short the market, but I just chose what companies I wanted to short. So healthcare is a short, but I'm just not good enough to short healthcare. Like you could see that Humacyte or Innovation was shorted 17, 11, could go to a 5. A lot of healthcare names are questionable. Some of the people who have been shorting ARC are correct. This is the short ARC ETF, Total Capital Short Innovation ETF. But I think what they massively were right upon was not shorting innovation, but it's just really a lot of competition. So fintech in itself was getting creamed because of too much competition. So both of them, Square and PayPal, had zero or not zero, but slower growth. So you could see Square on a downturn, but is it neutral? Some people are doing a neutral play here on Square, probably gonna short it at 220. So I'm not really bearish on a lot of these payment firms, but I avoid it simply because fintech is just too many players. And with e-commerce and fintech with too many players, that is, I think you shouldn't be against the fact that you could probably buy C Limited at a cheaper pace, right? So I think it's just more on the competition threats. Because understand that the gorillas are against C Limited. Who are the gorillas? Lazada's against C Limited. Unfortunately, Lazada was no match. Yeah, no match for Shopee. I could be proven wrong or I could be proven right, but let's just go through it next March because the numbers of C Limited is March, and it's gonna be a long time happening from now till March. But the trend would be your friend, and I've had enough. I think this is just going to be shorted all the way to 180. You might as well make it reset all the way to 180. And I don't think the market is patient enough to wait it out. Look at all the charts. Let me just show to you since we have more time. You've got space names going to go down likely. Rallies last night, in my view, are all impervious to being shorted. The thing, though, is that space-related names are all down, so it's not easy to short those. But maybe Rocket Labs. Rocket Labs is at about $15, so 20, 15 could go back to 10. I think the primary shorts would still be SPACs. You might want to short Playboy. Playboy, I think, had good numbers, but just like retail, some retail did good numbers, right? Like, what was the good number? Bed Bath & Beyond, Bath & Body Works, Victoria's Secret, Tapestry, Capri. Let me just show to you how retail happened. This is what happened to them. It's been noisy. After a good earnings beat, Victoria's Secret fell from 60 to 54. It's likely going to go down, not because of Victoria's Secret per se, but, it's just being questioned. I think like there's a lot of questions right now when it comes to retail. What happened to retail? It's just been shorted. Sell on good news is what happened to them. And then if you had bad news, tada, 20% drop, like what happened to Nordstrom. So in general, if you did well, you were just saved. But if you did badly, you were massacred. So that type of the market means that the market just has sell and no questions left. So yun. What happened with C Limited was just slow growth, right? Slow growth, DocuSign 30% drop on slow growth. I think it's opening about 190 tonight. Sorry, wow, it's not 190. What's 165? So even worse. So like it's like an entire sell off of this entire move. Diba? Go down lang. So the only reason why I'm hesitant to give a sell rating on the Nasdaq is because, in my view, the Nasdaq is primarily composed of Microsoft, of Amazon, of Apple, of you've got the Nvidias of the world. So it's like, why short the only safe havens in the world? If you're gonna short, you might as well short it through travel. MGM is a short. Hilton is a short. That's a short in my view. Marriott is a short. That's a short. So like, I think the biggest reward is to short a consensus reopening trade. Because the world believes in reopening. That's why Marriott went from 60 all the way to 170 or 3x. But if their numbers don't hold up, it's going to get at least 10, 20% down. So will you ever pay high valuations for airlines? I guess not. So in case airlines do rally, reverse it to a short. So like a lot of people were already selling the Jets airlines since March. And it's been in a downtrend. It's just been noise all over because people don't know, are we going to travel or aren't we going to travel? So Global Jets Airlines is still plagued with so many losses. And so any rallies would be shorted, in my view, fundamentally. Whether it's Jets, whether it's AAL, whether it's UAL, these are all going to be shorted on rallies. These are all shorts. Delta Airlines. So it's a short fest. It's a short fest. Now, what else should you think about? Meituan, yeah. So those who hate China, you could short this one. Meituan is giving you a short opportunity. So this is the labor-related loss. You've got a lot of, this is basically the Grab or the delivery arm of China, Meituan. So this is delivery courier. You've got a lot of labor wage strikes if Meituan doesn't pay all the laborers. So you're going to probably see it go down from about 240 all the way to 200 or even 99. So I don't think there's enough. You could see that shorting even at 240 isn't actually too low, given that there are more questions rather than answers. Yeah. I have more ideas, but that's about it that I posted. Wait, sige, let me see if I posted more ideas. Short Hilton, short Marriott, short SeaWorld, short Six Flags. Yes, agree with that. Short Lyft, short Uber. This is short Lyft. No mobility. Short Uber, short SeaWorld, Seas. SeaWorld is a short. While it's still high in the resistance space, sell it down. Six Flags is a short. Yan, short it while it's there. Live Nation, short concerts, short outdoor events, short it there, short further, short the Travis concerts. It's gonna be a long time before we go outdoors. Yun. If you feel sad, don't be. Just short the market. Thank you. Bye-bye.